The unique thing is there are many layers to our AI platform. The first layer, as I had mentioned earlier, was to create this continuous measure of investor sentiment. There isn't one. I mean, Barron's has they do a survey which is every few months, or people look at put call ratios and try to, those are the proxies. But those are not continuous measures. Price is continuous, right? I mean, price is changing every second, every minute. But sentiment, how does it change, is something that, so that's the first layer. We read something like 50,000 articles a day. These are all machines trained, small language models trained in the financial domain, so they can accurately identify what is being said about the 5,000 US equities, because there's different articles have mentioned different companies, and that's not an easy problem for a machine. And so we've spent a lot of time. So that's the first layer. That creates the sentiment data for every one of the US equities, and we now have about more than 8 years of data. And the second layer is, what do you do with this signal? These are investor signals. They've been proven to be a predictor of price movement, but then how do you actually build a portfolio? Because there you have to take into account risk and a particular design in terms of, there are different appetites. Is it large cap or all cap or mid cap? So that layer is the deep reinforcement learning platform, which is able to adjust by polling the environment. It retrains constantly. It's not a static model. So dynamically retraining, every time we run our trades, it's going to go back and look at the market conditions, retrain, and the model weights are adjusted, and then it predicts, what is the right. For example, we have a model that allocates across different sector ETFs. There are 11 sector ETFs. The model will tell you what should be the weight of your investment in each of those 11 ETFs. So that's the power of our AI platform. So we can now rapidly build active ETFs. For example, you want to do a S&P top 50, you want to do a Nasdaq top 50 or 100, or you want to do a Russell 1000, equivalent. We can create these running using our investor sentiment signal as well as the platform. And the goal here is to outperform that index, right? So it will outperform the corresponding index. So it's a very, I would say, powerful platform. And most importantly, these models have to go through a lot of testing, not only back testing, but in the live market. So these models have been tested for more than 3 years in live markets. So the model is very stable now. We can trust the model. And we're also building now what's the next generation, which is explainability, which is very important. People like the SEC say, okay, this model, how do we know this model is not going to go rogue, right? So we have a lot of guardrails in terms of being able to explain why the model is behaving in a particular way. So I think that's, in a way, it describes the entire platform. It's been a lot of work. It's over 8 years of research to date.